Good evening, everyone. Welcome, welcome. I'd like to start with a call to order and a pledge of allegiance. I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
While still standing, I was informed today of some awful news. One of our town residents who was on the Board of Assessment and Appeals, who is our current member on the OPEB Trust Board, Philip Skidmore, passed away suddenly. I was just with him at a dinner last week, and for those of you who know Phil, he was an avid outdoorsman, sailor, a very, very well, very well in his devotion to the town of Greenwich and everything he did, and it looked like he had a massive stroke and passed away. So if we could, a moment of silence for Mr. Skidmore. Thank you very much. Good evening, everyone. Kind of a lengthy agenda. Our June agenda is one that has the capital project carry forward. And I had thought about entertaining a motion to maybe do some of the department heads that are here before we get into that, but I'll entertain that if we see fit when we get to that. But the next item is number 2, and we have some pending claims that there's a discussion for, and I'll call on Mr. Raymer to advise us these claims.
Well, I think appropriate at the outset is a motion to go into executive session, yes?
Okay.
I so move that we.
And I would second that motion.
Our law committee members are recommending an executive session discussion. All those in favor?
Aye.
Opposed? Abstaining? That is carried. 6:38.
Good evening. I'd like to present the assessor's report for June 2015. First off, our tax bill file is at our vendor QDS, Quality Data Services, and our tax bills should be printed in the next week or so and be out in time for the July 1st deadline. Secondly, if you notice, our elderly, for the local, we estimated a budget of $950,000. Unfortunately, we have seen, in the last few months, we have lost a number of seniors. 36 seniors have sold, and 28 have passed away. We had about 26 new applicants. So our budget number this year is a bit less. We're now at $851,000 for our local benefit.
Okay.
And finally, we had 9 additional court cases filed to the Superior Court on the 2014 grand list. Okay.
Mr. Raymer?
This is a little left field for you because it's a dialogue that I have usually actually with the building department, but you make mention that there's 1,500 and change new construction permits and that not quite 1,200 of them have been inspected. Is there ever dialogue between your people, most particularly the appraisers, trying to make an effort of matching up the assessed value of the improvements against the declared value on the building permits at the time that the permits were being issued and paid for?
I think that we kind of reconcile that when we get the certificate of occupancy at the end of the final permit. At the end of any building project, they do come out with a final number. And at that point in time, we'll look at that number. It is not indicative of exactly how much their assessment may or may not change.
So there is a dialogue between you and the
There's
building?
no dialogue. We look at it. That's just
I
clear.
want to know if they're looking at it for the purpose of their guidance about whether or not they're accepting figures as being the cost of the anticipated work for a building permit.
Construction. Very good question.
I can tell you from personal experience, it does go up. The amount that they ask for.
Well, then I'm sorry to say to you, Mr. Johnson, I'm glad. And then second question, no further settlements over the course of the last month. The cases you listed for May are the same as the cases you listed for June, except for the additional 9?
Correct.
Okay. Thank you.
Any,
Question.
Ms. Kiernan, I'm sorry.
Lauren, could we just go back to the senior tax credit? And so the actual number versus budget is 851,
Correct.
689. How does that compare to actuals from prior years? Is that a real blip, or is that
Last
much
year,
on par?
we had 653 in our local seniors for a total of 899,000.
okay?
So I think this year we seem to have a lot of seniors sell their properties, and we had a fair amount also pass away.
Thanks.
Further comments on the assessor's report?
Move its acceptance.
I have a motion by Mr. Raymer, seconded by Ms. Tarkington. Discussion? All those in favor?
Aye.
Opposed? Abstaining? That has carried 12-0-0.
Mr. Chairman, I'd like to make another motion that we take another item out of order, and that's under new business, Parat Memorial Library, Association of Old Greenwich, Inc., funding budget guidelines, in light of the fact that Mr. McCarthy is here, so that he doesn't have to.
I have a motion
Until
to
late
amend the
hours.
agenda by Mr. Finger,
I would second that.
seconded by Mr. Raymer. Discussion? All those in favor?
Aye.
The first bullet point on item 10, new business, is now before us. And I will call on, for that item, on Mr. Norton.
Yes, Mr. Chairman, the audit committee has been in continuous discussion with the Parat Memorial Library regarding budgetary guidelines as per our responsibility under the charter. And we were able to come to an agreement, which is basically very similar to that which we approved for Greenwich Library 18 months ago. And it was sold before us at our last meeting, and we voted 4-0 to approve it.
4-0. Okay, committee reports, discussion. Mr. Raymer?
Through you, Mr. Chairman, asking Mr. Norton, is there a written memorandum
Yes,
that's
there
been
is.
signed?
Yes, there is. There's a written memorandum. I don't know if it's been signed. It's been agreed by both parties.
Was there a plan to be disseminating that among the BET at the moment that you're asking that we vote its approval?
I thought it was to be.
Peter, was it? I thought it was in here. I thought I saw
No,
something.
it's not in here. No, it's not in the package. We did distribute the one for Greenwich Library.
Is it finalized?
Yes, it is.
I don't know why it didn't get in.
Okay, I can bring that back. Welcome, thank you. So, a little background. For many years, we had this whole document which concerned how the libraries worked in with the budget, and we started off very interesting with Greenwich, but we now have one of the best relationships going in quite some time on their capital, their planning, and what have you. So expanding this to Parat, I think, is just fantastic. How did the board receive it there? How did you?
The board was very receptive. We had been part of the early discussions between the BET Audit Committee and Greenwich Library, attended a few of their meetings, so we were well aware of the desire on the part of the BET to revise the former so-called Stoll agreement, and hence that's where we are today.
Well, we won't be able to take action on it tonight because our members don't have it, but I think from our point of view, I'll make sure it's circulated, and, I thank you for all your work with the audit committee, and for the members of the audit committee, I sincerely, thank you for your work. I think this is all positive when we improve our communications.
Mr. Chairman, I don't believe that the Stoll agreement applied specifically
To the Parat.
to the Parat Library. So actually, this is an extension of the agreement that we have with Greenwich Library. It mimics the Greenwich Library with some changes of name. The Parat Memorial Library I believe began, 1904, and that I believe is indicated in the agreement that we have. I believe it was the Sound Beach, what was the name, Kevin?
Had been, the name of the town at the time had been Sound Beach.
Beach, right.
But I thank you and be happy to attend a future meeting.
No, I'll,
Necessary.
it'll be on our next agenda as just an approval. I think if members had a question, they'd be asking now, but we'll get that circulated. Thank you, sorry for the long wait.
It's okay. Thank you.
Another item that applies to him.
Oh, there is?
No, it's a routine item.
Yeah, that's a routine item. Okay, thank you. Do I have a motion for any other agenda modifications?
Sure.
Mr. Drake?
Mr. Chairman, I'd propose to move forward in the agenda, the item in number 10, which we have listed as pension consultant discussion.
Do I have a second on that?
Second.
Seconded by that side. Mr. Raymer, discussion? All those in favor?
Aye.
Opposed? Abstaining? That motion is carried. So let me give a little background. Good evening, Mr. Chadwick, Mr. Simon. There's been a lot of talk. We do not have, I think the retirement board, I want to try to be accurate, I think the retirement board is seeking to renew a contract with one of the financial advisors that you use on a regular basis. The contract is not complete, therefore it hasn't gone to the law committee or the investment advisory committee as of yet. But,
Investment advisory passed a 2-1.
Yeah, that's
It was
right.
2-1, Mr. Blankley was absent.
got it, okay.
The law committee has not seen it.
The law committee has not seen it. So with that, I think the idea was to, because we're going to be, our next meeting is in July, and I think the idea here is to try to have the discussion on that, because there's been articles and conversations and email traffic, and I thought it might be just a better approach to doing this. So, Mr. Chadwick?
Okay, thank you. Yes, getting the approval for the contract is one thing, but as you say, a lot is swirling around about it, and in particular, I think it has to do with comparative performance of the town of Greenwich versus the universe of our investment advisor, NEPC. The problem is that there are, to my knowledge, no other funds quite like ours, which makes it very difficult to find a universe that we can compare ourselves against. And NEPC has been working on this as well without too much success. But the reason for that is that municipalities have all different sorts of things swirling around them when it comes to their pensions. They are using different mortality tables. They have assumed different rates of inflation. They assume different rates of return. They have different unfunded liabilities. They have differing salary levels. They have differing assumptions as to how fast pay is going to go up. So all of that gets rolled into this mass, and to find another fund that faces exactly what we do, I think is really impossible. However, the numbers are the numbers, and when you look at the last 10 years, the rate of return for the town of Greenwich versus the universe which has been presented to us by NEPC trails that universe by 0.5% on an annual basis, which is not chump change over 10 years. I think if you look behind the numbers, the particular reason is fairly easy to see, and to my mind, it is the most critical thing when it comes to comparing different pension funds and how they are managed, and that is the risk that we're willing to take. Over the last 10 years, the town of Greenwich ranked in the 17th percentile in terms of risk assumed, which meant we were pretty much on the low end of what other people were doing. And we went through this last year. The reason behind that is that we were operating in a universe in which we could not put more than, we had to have at least 40% in fixed income. And when you look at rates of return over that time period, equities outstripped fixed income fairly nicely, and it took us 8-9 months last year just to get a change in the town charter to allow us to get down to 25% fixed income. But that was, in my mind, the principal drag on the fund, or the principal reason why the fund was underperforming everyone else, or many other people. I want to talk a little bit about what's going on right now, and it leads into why I think it's important that we stay with NEPC. If you look around the world right now, the fixed income markets don't give you very much in the way of return. And bond yields are negative out for 10 years in Switzerland, for 7 years in Germany, 6 years in Denmark, 4 years in France, Sweden, Belgium, 5 years in Finland, Netherlands, Austria. So even in the United States, looking at fixed income rates of return that are possible right now, at the 5-year level, it's a bit over 2%, and at 10 years, the yield on a 10-year bond is 2.4%. These are long, long ways from the 7% assumed rate of return that we have in the portfolio. By the same token, equities have had an extremely large move off the bottom of 2009, and there are many, many people who say we've come too far too fast and the U.S. Markets are ready for a decline. Stocks this year have returned in the very low single digits. In fact, the Dow Jones is negative for this year. And I will tell you that we will not make the 7%. It's impossible for us in the last 15 days of June to have a 7% return for 2015. That said, I have talked with our actuaries, and even missing that number will not necessitate any increase in the pension just for pension payment by the town, just for investment performance. There may be other things going on. If the outlook right now is for a pretty bland return in terms of equities and almost nothing in fixed income, where are we going to go to even begin to achieve what we need to meet this goal that we have? And what I would say is that we have to continue to do what we've been doing in recent years, and that's push the portfolio further and further into alternative assets. And by that I mean primarily private equity and private debt, where we get not only higher returns, but we also get the benefit that these investments are not marked to market every day, and when the stock market goes down, and that day will come, these, I think, will be a bulwark in terms of our performance. This brings me back to NEPC. And granted that NEPC is ranked as the #1 consulting firm in the country by Greenwich Associates, which is the main company that looks at all of this, and we participate in their polls. If my observation is correct, and that we're going to have to go into more non-traditional assets, I think that this is what set NEPC apart from all the other responders to the RFP. And that was that they had a very large in-house operation for looking at managers. They are responsive to our needs, and that's become much more so in the last bit of time as we have changed the people who oversee our account. And importantly, we already have 14 investments in private debt and equity, and there was no learning curve involved for NEPC. They knew all of these companies because they had brought them to us. The disappointment that the entire board had was that there were only 6 respondents to the RFP. 4 of them, I don't think, fit the bill for us. One had 28 people. The other had been in business for 6 years and had 48 people. I could go through the other 2, but the only one that seemed to have a shot at it, frankly, was Morgan Stanley, which is a large company and has plenty of resources, and we were hopeful that they would be made available to us. However, we didn't deal through Morgan Stanley in New York. We dealt through Morgan Stanley as a brokerage entity in Fairfield, Connecticut. And there were 3 individuals who came down from that office. As best I could tell, their approach was to listen to the radio in the morning and come up with some investment ideas. I didn't think that was going to be satisfactory, and they could not give us the promise that we would get access to anyone in New York to talk about alternative investments or what was happening in the market or anything like that. So we took a pass on them. They also happened to be more expensive than NEPC. Not that I think that's particularly important, but that's just a fact that's out there. And I would ask the same question you're probably asking. If NEPC has been our consultant for 10 years, how is it that we can't get a contract through? And why is it still stuck in the law department? I don't have the answer for that, quite frankly. I think it was really more NEPC pushing back on a couple of items than it was us doing anything. But I just want to close with a little story. There was a snail making its way through Central Park, and on one sunny day, 2 slugs came up and robbed him of all of his money and his cell phone. And the police, questioning the snail, said to him, did you get a good look at these slugs? And the snail said, no, it happened so quickly, I wasn't able to. In many ways, that is the pace that the town of Greenwich works at. And right now, as an example, we have back at the end of last year, we felt that the bond market had finally reached its nadir and that interest rates were going to start rising and that we ought to shorten up our portfolios more than we had. We interviewed some companies. We picked a couple that we would like to move money over to. That was in December 15th. It is now June 15th, and still one of them languishes in the law department without even yet still going through the law committee, the investment committee, or BET, which is I don't know how many further months out. I think if you want to manage money against other people, you have to do it on a timely basis. They're not sitting around like this, and I think that is another drawback which we face here in the town.
So I'm going to have to go out and to Mr. Simon. So when the economy melted in '08, that's when we started getting the pension going from, shortly before that, from 0 contribution annually to 7 to, I think you and I were budget committee when it hit 14. So prior to that, did we have these hurdles with investments, or is this changing, or a lack of ability to change? Is that something, did something change town side, or is it just we're trying to do our investments differently or more aggressively, and there's more change, and that's what the issue is? Somewhere I'm finding a broken process here. Because for, the years you were on the BET, I don't remember in the early days that we had so many of these. We seem to get more of these now.
I just have one comment. When I was on the BT, you were getting 6 or 7% of fixed income.
Okay.
And the town was making $6 million a year in fixed income. And just think of what's happened now that interest rates have gone to 0. Where are you going to find the return?
And
we were 40% in fixed income.
by charter, by our town charter, now we've reduced that to 25%.
Right.
That's the big difference, is that fixed income is now 0 or 1%.
So from our point, I'm going to go to our law committee as the first stop for a question. When you get them, we get them that month, right? I mean, there's no delay there. Are we having language problems, contract problems that are?
I think actually none of the above, but there is nevertheless a clear lack of nimbleness. This is a dialogue that we've been having with each other for some months now. An investment is proposed. A sound idea would be to go ahead and jump into that investment 2 or 3 days later. And the fact of the matter is that contract materials are forwarded to Assistant Town Attorney Eugene McLaughlin. He goes through them, he has some dialogue back and forth, typically with the fund. The funds tend to have, if nothing else, an indemnity provision which flies in the face of a charter provision that we have. So it's almost mandatory for Gene to have at least that subject of conversation with the fund. Sometimes there's a few others. And so the fact of the matter is that probably 2 months after it was proposed to us, we're finally voting on something at a BET. And 2 months isn't the nimbleness that investment people are used to working with. I don't think it's quite as long as Mr. Chadwick was suggesting on some occasions, but 2 months must be a very painful process for somebody in the investment business.
I have to admit that part of this problem is that this particular company is headquartered in England. And after 4 months, the law department decided that they needed outside counsel. So we are waiting through that.
I would say the problem is not on the BET side. They've been very
No.
responsive, they schedule the meetings, they vote promptly.
We try.
It's the law department. But I don't blame them either.
Well, I think actually, if
Because
you
they
don't,
give them a lot-
if you don't mind
they give them a lot
respectfully,
of
just, I think the problem is in the charter. I mean, and we've had this dialogue, but
Yeah.
the problem is that on the face of the charter looks for the BET to approve both the company and the vehicle of investment. And so we become your co-counsel. And now then suddenly, because we're your co-counsel, you're stuck with the structure of our meeting schedule to a certain extent.
Right.
Yeah, I would echo what Larry says. I don't think the problem is getting it through the two committees and the BET. And the law, we have poured, as you know, a lot of new investments into this portfolio in the last few years, and there's only one person in there working on that, and so he gets inundated from time to time. I just point that out as a hurdle and a roadblock that we have.
Sorry to interrupt, but a piece of it also is because the economic world changed, so that you were getting very poor return on the fixed incomes, it became necessary for you to make some changes in your investment strategy. And so I wasn't there for the early days, but in the time that I've been here, what I've been seeing is that you've been coming to us with kind of a shift in your investments away from more traditional investments and
True
also
enough.
some of the private equities and the like, alternative forms of investment. So there's been a certain urgency in making certain portfolio changes, which maybe wasn't happening 10 years ago. But it's happening now because you're trying to make a shift to try and do something to improve the return of what otherwise has been very low returning investments.
So let me ask another question.
Okay.
My memory's coming back, and I'm going to lean on Mr. Norton and maybe Mr. Fingerer and Mr. Simon a little bit. In the past, the retirement fund was managed by all I can think of is Frank
Frank Russell.
Frank Russell.
But that was in 2002.
Well, I can go back even another year or two in memory.
Yeah.
With that said, if that was the scenario now, would that company, Frank Russell, if they were managing the retirement, would they have to go through the same things with us?
I don't think so. I think you would say, we're approving Frank Russell, we're giving them all the money, and they're gonna report once a quarter. Once a year, they're gonna fly us to Hawaii to hear the results. And, remember that part.
I do.
No, and then you hear and then, you hear the results. And so that is an alternative solution.
Under Section 208, each time you want to put funds into the hands of a corporation trustee, that's the words from the charter, the BET has to approve, and so does the town attorney, by the way, each of them have to approve the company that you've picked and the vehicle of investment. That's in your charter, Section 208A.
So in that particular case, by the way, I'm not suggesting that, I'm just,
No, we're happy to answer the questions.
my question would be if we did with that firm, all the retirement investment, they would then be able to do what they wanted without having to come back in each and every investment they made.
Yes.
But they would be given a set of investment guidelines and a policy statement that they would have to adhere to.
But it would require just one round of approval at the BET to accomplish it.
So that begs the question, because we hear conversations and statistics about peer communities. What do peer communities do? What do the top 10 performing communities do?
They don't have section 208A.
I know, we'll get to 208 in a minute.
You know, the top 10 are not always the same top 10.
Right. But I mean, what, if you were
know
to,
the answer to that.
right,
Tell me who the top 10 are,
I would,
and then I'll find out the answer.
it's not Fairfield. But I guess,
Yeah.
but I guess my point is, it's just, I think the purpose of this discussion is trying to figure out, you know, what alternatives are. Charter change may be one. Maybe the law committee needs to start working on that.
Yeah, I don't disagree.
I just think it's important because, you know, we hear about this and obviously as, and I'll give Mike Wasik credit, you know, he's convinced me that our pension obligations are the biggest debt the town has, the biggest long-term debt the town has. And, you know, we've seen what it's done when the contribution went from 0 to 21 million over 14 years. So we see the budget
It's time
impacts.
than that, I think, but go ahead.
So I guess,
But here's something else you should think about that you may not want to think about. So we're going to do an experience study this summer. Are people living longer? Are they dying slower? What is happening to our experience? And if you're going to find, which I think you might, that people are living longer, that's going to require an increased contribution. Because now you're going to have more money to pay out.
so it's a longer running benefit.
And that's going to be, you have two things that are working to the town's disadvantage. Speak to that. Is one, you're going to have people living longer, which are going to drive up your retirement expense, and two, it's going to drive up your healthcare expenses. So you have, and then you keep focusing on wellness. So this just.
Is it giving more bacon to our employees?
Well, but that's it. You're paying more money in the longer term for retirement. You're paying more money in the longer term for
Healthcare.
healthcare, and you're paying money in the short term for people to stay well, which affects adversely your two long-term trends.
Mr. Chairman,
Mr. Goldrick.
Mr. Chairman.
Well,
I may,
Mr. Goldrick, then Mr. Raymer.
I may bring this back, focus this a bit more. We're talking about relative returns. And I'm not sure how many of you have seen these relative returns. The Retirement Board in its last meeting didn't even go over these. If I could just relate these, over the last 10 years, the Greenwich Pension Fund has underperformed 84% of similarly sized municipal pension funds, those between $250 million and $1 billion in gross assets. The last 7 years, underperformed 72% of those similar funds. Over the last 5 years, 65%. Over the last 3 years, 75%. Over the last 1 year, 85%. The fiscal year to date underperformed 89%. And the last quarter, they've underperformed 94% of those similar pension funds. Now, if you were to go and ask NEPC how many funds there are, what percentage of the municipal pension funds lagged in the bottom quartile, in every period, you'd probably find 2 or something. It's very small. This is an extraordinarily poor performance. Over the last year, the fiscal year, last year, it's 1.4% underperformance of the mean. We're not talking about the best funds out there. So that's about $6 million in performance over the last 12 months that we did not earn. Now, let me take issue with what Mr. Chadwick said, which is that the Greenwich Pension Fund is unique. It's not, by any stretch of the imagination. It doesn't matter what salaries people are paid or any other of these factors. It is a portfolio, and they invest in stocks, municipal mutual funds, and whatever, and you're measured against that. The only difference is that smaller funds tend to be more narrowly invested. So this is significant. NEPC's contract should not be renewed because they have been not only the investment advisor for that decade, but more. And when I started out as the liaison to the Retirement Board, and I remember seeing the figures in early 2012, which showed that over the previous 10 years, the pension fund had underperformed 90% of all municipal funds. So this chronic underperformance goes way back, and NEPC hasn't been our investment advisor that entire time. Now, we are governed by the Prudent Investor Act of the state of Connecticut, which is my understanding is our state version of the Prudent Man Rule, which rules ERISA funds. Excuse me. And simply put, that means that and a fund should be managed as a prudent man would manage the fund. Quite simply, no prudent individual would keep the same investment advisor for this many years doing this poorly. Nobody would do that. It's, 10 years, it wouldn't go 10 quarters, and they don't deserve to get a new contract. Now, whether the members of the pension fund are not listening to their advice, or they're just giving bad advice to this particular pension fund, it doesn't matter. It's not working. And you do not give them a new $750,000 5-year contract to do that. It simply doesn't make any sense. Now, I would just also point out that Mr. Chadwick had said, or Mr. Simon had said, well, we have a low interest rate environment now. In relative terms, it doesn't matter. Everybody is faced with the same investment environment. And relative to those firms who are working in the same low interest rate environment, not only did we do poorly in that low interest rate environment, we did poorly as the market was going up. In every phase, we've done poorly. Now, Mr. Huffman and I gave you a white paper, which we submitted as an addendum to Mr. Drake's report, which laid out exactly what all of the problems are in this pension fund. I would point out that in the Retirement Board's note to the Investment Advisory Committee, they pointed out that over half of the funds that they had purchased for the pension fund were no longer there, mostly for bad performance. Well, that's telling. That's a terrible hit rate, as we call it in the industry. Over half of these funds that they purchased don't work out. Now, they've indexed half of them, and half of them the investments are going into very risky investments, private equity vehicles, private debt vehicles, high yield funds. And I point out the experience with the private investment vehicles is very poor. They've underperformed significantly there as well. Now, the Retirement Board says, well, they haven't had time to season. But there's no evidence that that's the case. There's no evidence that this is anything but continued poor selection. Now, before this board, we have a fiduciary we have an oversight responsibility. We not only approve the investment advisor's contract, but every new investment that goes into the fund, we're on the hook. And to give these guys another 5-year contract and a raise, talk about chutzpah. They wanted a raise, is just unheard of. Now, I would also point out that Mr. Chadwick pointed out the poor response to the RFP. And yet he went ahead with those 6 names anyway, even though there were several firms that he had hoped would respond. Now, the explanation he gave to the Investment Advisory Committee was, well, with the criticism, nobody wanted to respond to this RFP. That stands common sense on its head. Anybody who is looking for a business opportunity and sees a pension fund that's underperformed for a decade, you're going to bid for that. Clearly, unless something funny is going on, you're getting rid of your investment advisor, period. But they didn't do that. And they also selected one other firm as the finalist that they knew was not appropriate. So that whole process should have been stopped to begin with. They should have gone back and contacted the names that they wanted to bid who might have been good advisors. They should have tried to advertise more widely. So the notion that we are going to be presented with a take it or leave it, NEPC, that's it, is just unacceptable.
Well, I think that's the purpose of tonight. I don't think that's the case. Question, how long has NAPC had a contract with the town?
10 years.
Continuous?
12, actually.
2003.
Since
I think
'03.
it's 5 plus another year added in.
Okay, good.
Mr. Chairman?
Hang on, Mr. Raymond was next, and then Mr. Norton, Mr. Finger. Yes, if you want, you can, sure.
Maybe you should have a chance to respond before I ask another question.
I'm not going to ask a question, I'd like to make a statement.
Maybe I'm
Well, hold on, I
I'm gonna
have,
wait. I'm gonna wait.
I have Mr. Raymer next.
Wait, okay, you'd rather wait?
Yes.
A couple of questions, if I can. I'm fascinated that you mentioned that historically, this town was in the 17th percentile on the absorption of risk or taking risk in portfolio. Who provides you, I had no idea you could produce a figure like that. Who provides you with that figure?
Oh, NEPC, they,
The document we gave to you.
And in the posture of the risk, in the posture of the risk that we're taking today, do we know from NEPC what our risk acceptance rating would be today?
I think we could probably find that, because I know it's there. I'll let Larry look for a minute. It's kind of intriguing to have people agree with you that the outlook for stocks and bonds is not very strong right now, and then say, so you must do something else to get a return. And I'd like to know what other people are doing. If we're,
Well,
but let me say,
Sorry.
just on the idea that what we're doing clearly is that we are trying to put this portfolio into some alternative investments. Our goal is 25% of the fund. Right now, we are at 16. It is very difficult to get money invested there because, one, money's being returned to us so quickly with the investments paying off, and secondly, there is a real dearth of product, if you will, out there, because there's so much money out there chasing the same, everyone's facing the same problem. And everyone is looking for a solution. One of the great things about NEPC, in my mind, is that they're really tied in with some of the very best firms that are in the alternative investment universe. And not only that, their size and their presence has allowed us to get into investments that we might not, I know we would not otherwise because we hadn't been in before, and to get discounts on the rates that were being charged. But in the last year alone, our private equity firms lost us 85 basis points in performance. And our private debt firms lost us 14, so there was 1%. And despite what Mr. Goldrick says, there is a J curve that takes place in the private equity market, and that it takes a while for these investments to begin to pay off. And you're making contributions and you're paying fees and you're not getting anything back. But that does change, and then you get the other side of the coin.
Any luck, Larry?
They only have it for 3 years. For the last 3 years, I think if you look at the standard deviation, is on page 42, we're at the 79th percentile,
On risk absorption.
where 0 is the best. But
I'm sorry, 0 is the most conservative.
0 is the safest.
Yeah,
But, so we're at 6.62 standard deviation,
yes.
and the median, not the mean, the median is 6.19. And the 75th is 6.54. I mean, it's not like the distributions are so wide, but they're relatively tight.
So a small movement makes a large difference in percentage. But nevertheless, we moved from 17% to 79%?
Over 10 years,
Yeah, 79.
over 10 years, we were at 17%.
And we've moved to 79.
Larry?
And we are, as I say, in my opinion, I think that the United States economy is getting better and is getting stronger, and it is the best place in the world to invest at this point in time. You can say whatever you want to about Greece, but I've been through other countries devaluing and going under, and that doesn't last very long. The bond market is already telling you, and the Federal Reserve has already told you, that interest rates are going to rise. That is going to be a negative for the bond market, and the Federal Reserve is raising interest rates because they think the U.S. economy is doing better. And the better the U.S. economy does, in my opinion, the higher the earnings are going to be for U.S. companies, and therefore we're going to see the stock market well outperform the bond market. We haven't had that happen yet. Everything's just been dragging along now for almost a year. But that day will come, and we are set up with that. We have half the portfolio in U.S. stocks.
Without my necessarily adopting all of the view that Mr. Goldrick has put forward, I was intrigued and would be interested in your view on one piece of it, and that is there not a value in changing investment advisors periodically, partly to keep them responsive to you and partly to be able to get a breadth of advice from more than one advisor over time?
I think there is something to that, but I don't think it means that you have to change advisors. What we have done, I called the chairman of NEPC when this was going on and said that we wanted a different person on our account, if you will.
Mm-hmm.
And I talked to him about the top advisor that they have in the firm, a person that we already knew, and he said yes. So we have him there now. I think if you came to the meetings, there's a world of difference from what they would be. But I still think that the resources that NEPC has are important to us.
That's all my questions,
I
Mr.
could
Chairman.
just respond.
Please.
But you have to follow the town RFP process. And we sent out the bid request to everybody who bid 5 years ago, and other people, and we published it fairly widely. We left a reasonable amount of time. It was a very disappointing response. But I don't know how we would go out and find, I don't know that you can go out and say, well, these aren't enough people to respond. I'm now going to cast a wider net. You could say that if you don't think anybody is qualified. But I think there's two factors. I think the biggest factor was that NEPC has been with us so long, people feel that going out on bid is a formality, that they're never going to change, and therefore people aren't going to waste their time to bid. And that's a concern. I don't know how you overcome that. You can't advertise new investment advisors only apply. But that's a problem. And two, I think if we were going to make the change, we should have made it 5 years ago. And now we don't seem to have anybody interested in applying. And the 4 people were clearly not qualified. One was maybe qualified or maybe not, but it would be a whole different experience.
Mr. Norton?
NEPC is not, we repeat, NEPC is not an investment advisor. They are consultants.
They are
Investment
consultants.
advisors have a fiduciary responsibility, consultants do not. Now, where are the investment decisions made? The investment decisions are made by the trustees of the retirement board and endorsed and approved by this body. That is where the blame for the poor performance of the retirement board is. It rests both with us as well as the 5 trustees of the retirement board. When you have a consultant acting in the capacity of an investment advisor, they do not have the responsibility that an investment advisor has because they do not have to have it. And subsequently, in the last 3 years, or 2 years, I believe it is, an investment plan has been devised by the retirement board. Investment advisors are obligated by their fiduciary responsibility to abide by the investment plan that their client has. The retirement board has not had a specific investment plan until the last 2 years. NEPC has been working within the context of some guidelines, an outline that has been presented to them by the retirement board. But the real responsibility for the performance of the retirement board rests with this body.
I just make one other addition to that. So that we follow a process. The process is you choose an allocation strategy. They present to us 8 different allocation strategies. 2 of the advisors said reason other firms do better than we do is they invest more in hedge funds, and we should have like a 15% allocation to hedge funds, and therefore we would probably be able to increase our return. but we're not.
I'll speak to why we don't have hedge funds, but you want that now? We don't have hedge funds because I don't know when the manager's going to be in jail. I don't like paying fees to the hedge funds to hire lawyers to defend them. I don't know which hedge funds will even be around 3 years from now. And it takes only one disastrous move to put them out of business, and when they go out of business, you're left holding the bag. And we talk about risk, I just don't see putting the town money into that.
And if you notice the
Thank you.
word on the page here for returns, it's gross returns, it's not net returns. So if you're paying a hedge fund manager 16%, you're making a hedge fund manager who's making 16% and giving you 9%, you're gonna have great gross returns and mediocre net returns. And these returns are not net, they're all gross. We happen to be a very low-cost plan, so we end up being unfavorably compared to. And
Most
also
hedge
the
funds
union.
also will charge 2 and 20.
Right, but if you're measuring yourself on gross, you don't care, do you?
Well, you
But
do,
if
because the 2 and
we
20,
care as a town.
the 2 and 20 is,
Expensive.
Well, Mr. Norton, I'll say that one thing for NEPC, and that is all of these private investments that we have are presented to us on a net basis. And they've netted out all the carry and the 20% and the 2% and all of that. I don't know that there's another fund in the country that presents their rates of return for alternative investments as conservatively as we
I'm
do.
not specifically defending.
No, I'm just trying to explain that we if you really want to get down in the nuts and bolts, as you know, there are lots of different ways to report returns. And, if we're reporting net and someone else is reporting gross, we're going to look bad.
Investment advisors will report it on a net basis. They have to. Consultants do not have to report it on a net basis.
Okay, well,
Okay, let's move on. I have Ms. Weissler, I'm sorry, Ms. Kieran, Ms. Weissler, Mr. Goldrick.
So I had two questions, which, the first is the Investment Advisory Committee took a vote, sounded like 2-1 on this, and I would be grateful to hear what the issues were, and if they could summarize their discussion. And the second is to ask Larry and John about the two trustees of the retirement board who represent the beneficiaries, and whether they're the employees, and whether they have a particular point of view that is more in agreement with what Mr. Goldrick is saying or with what you're saying, if you could expand on that. So there's two questions.
First should be answered by Mr. Drake, since that was the Investment Advisory Committee 2-1 vote on the NEPC contract.
Yeah, and our minutes are a matter of public record, and Mr. Norton can help me.
Can't hear you, Bill.
Oh, sorry, thank you. The minutes of our decisions are a matter of public record and can be consulted by all. And so Mr. Norton can help me if he'd like on our 2-1 vote at the time, which Mr. Huffman, I think, was the person who voted against, if my memory's correct.
Well, I voted 2-1 basically because of the fact that you now have an investment plan, which you did not have 2 years ago. And I, as an investment advisor who do run other people's money on a fully disclosed discretionary basis, I mean, if I don't live by the investment plan that's presented by my client, then I've in effect maybe not put myself in jail, but potentially bankrupted myself. So that I'm going to support, when you have an investment plan, I will support that because that's the guideline that you're given to whoever's handling any investments for you.
That's right. It's if I can give a little more color to the meetings that we attend with the retirement board, NEPC acts like a staff, in effect, for these gentlemen. That 1 month they'll say, go find me 3 private equity managers in real estate that would be suitable for us, and weigh them and compare them and examine their terms and their records and give us a recommendation. The next month it'll be something else. That kind of staff, we don't have it in Mr. Menarski's organization. We don't have it on this board. But for the price they're paying for it, the deliverables of the information, it's like having a staff for that price that's exclusively devoted to finding the opportunities and weighing them under their direction. That's a valuable thing. So they're rightfully, occasionally, very demanding of those people. They really recently, in effect, said, we'd like to change the individual who's responsible for it. So I think, all things considered, if you weigh the services provided and by whom they are provided and the way they work as staff to support the decision-making of the board, that approach is, they're getting value for the price. More value than you'd get for paying more to Morgan Stanley to get less deliverables. So, you know, I guess it was long before my time, we had an approach where we put total discretion of the money in Frank Russell's hands. That's not an approach that prior BETs wished to continue. As an alternative, we have board of volunteers who are investment experts that make decisions based on recommend.
That person voted against the motion.
By all means, if Mr. Huffman wants to speak, sure.
I had indicated earlier that I felt that we did need to have an RFP, and I was disappointed to hear that we got as poor a response as we did, but I still felt that based on what I had seen of their performance in the past, I could not concur in continuing a new contract with any PC.
Your second question.
Yes, I'm still on you.
What is it you would like to hear?
I wanted to hear what the other two trustees of the retirement board who represent employees or beneficiaries, what their view is and whether, you know, some of what Mr. Goldrick is saying resonates or not.
I haven't ever heard them express any view.
I'll tell you their level of participation. So we have one who has no real investment experience and has almost no opinion as to where we should invest or not, and will follow the lead of the other employee representative. And we have Mr. Pointer, who used to work for Morgan Stanley as a fixed income trader, who has an opinion as to where we should be and has been very helpful in some of the fixed income discussion. He has thought we should invest in commodities. He thought we should invest in tips. And the board voted eventually to get out of both of those investments. And it's not fair to say that he recommended these two which didn't turn out well, because everybody makes recommendations. But in general, they're not elected to make investment decisions. They're not elected to do anything really other than to represent the employee's interest in the administration of the fund.
So they have explicitly no role in investment decisions, only in administration. They have a vote. So it's not just, so Larry, it's not just administration. They do have a vote over investment.
They have a vote in it. They have a vote in investments, but one has no expertise and admits to that, and two, the other one does have expertise and is helpful. But that's not really what, when you're running for the, I shouldn't say that, I'll stop.
That doesn't happen.
Can I try to answer that question?
Please.
I'm going to speak for all five. I came on the board in 2004, and the only investment that they had on this list of 21 for private debt and equity was Gilbert Global, which was the worst investment they made. It was made in 2001 or 2, whatever. One of the things that happened over the years was there was the financial meltdown. And we had an investment rate of return about 8.5, which we ratcheted down to 7. Collectively, we all agreed that we couldn't get that 8.5 with the asset allocation we had at the time, back in 4 and 5 and 6. And I think collectively, we all agreed that we'd have to move to private debt and equity. And we took the lead of the chairman, Mr. Chadwick, who replaced a previous chairman who had no investment experience at all and wished to actually get on the Parks and Rec board and was diverted over to the retirement board. So I think the answer to that question was collectively, we thought in order to get, which is now a 7% rate of return, better than that, we'd have to go to the private debt and equity makeup that we have. Now, I mean, there were some bad decisions as far as the move to commodities and the tips, et cetera, and there was some good decisions. But I think collectively, we are all in agreement to move that way. And I don't think there was any dissenting votes as far as the allocation that we currently have. And hopefully that helps. You guys agree?
Nancy?
I was going to say, I think this has been a helpful discussion tonight. I mean, not just pertaining to NEPC, but to also hear your philosophy and hearing the discussion about the focus and increasing emphasis on the alternative investments, given the outlook for fixed income not being so great and, the equity markets or equity returns being maybe at the sort of toppy at this point. I am looking, though, however, at your private equity and private debt returns for the portfolio over each period, beginning from 3 months to 10 years, and how we have underperformed the benchmarks. And, is that a function of just bad calls historically? Is that the fact that, there's a seasoning that you're saying takes place? And then I guess the second question was, given that you said that many pension funds and investors are now looking at the alternative space, to what extent do you feel that the opportunity set is diminishing, say, what you're seeing over like the last year, because there's more and more investors either chasing those opportunities? So 2 questions here.
Well, certainly you're right about the latter. We have the people out there, but the money isn't getting invested nearly as quickly as we had anticipated. As to the former, these numbers that I'm looking at show a 10% return over 5 years and a 10% annual return over 3 years for these investments. But
If it's Cambridge Associates, is that the benchmark that we compare ourselves in private debt blended index? Those are.
I'm just looking at raw numbers.
I was just looking at the report we get from Pete, which shows it has a benchmark. The flash report, yeah.
Okay.
And in every period of time, we have underperformed, and I'm just wondering to what extent, if this is where we're going to put our money in the future, to what extent these were historically bad investments, or what accounts for that?
I hate to say it, but NEPC has told us not to pay much attention to that the way it's put together.
Why?
They're drawing in numbers from every which way with no particular, U.S. all PE 1 quarter lagged doesn't really mean very much to me.
But I'll respond to
I
that.
don't know.
I run a private equity for I calculate the rate of return based upon time-weighted investment in cash. And we've been running for private equity between 9 to 11% for each of the last 3 years. I'm not sure how well it's going to go this year because the oil has not helped. But it's sort of like a stabilizing influence on the portfolio. When the portfolio hit 17%, it brought our returns down. If the portfolio hit 8%, it brings the returns up. It's designed to be a non-correlated return between 9 and 11% a year, which for us would be perfect. It also depends on where you are in terms of your investment cycle. So if we start making a lot of investments more recently, we're going to have more of the money going out in what is known as the J-curve problem, where you're getting a lot of money deployed and not hardly any return, you're getting negative return. And it's only as you get to be more of a mature plan in terms of a lot of private equity and a lot of private debt investment that you have a steady flow coming in and out, that you have, I think, a truer measure of how well we're doing.
And I think the Cambridge Associates number reflects that. This is a long-term number that has been out there, and it's well-seasoned, unlike our portfolio.
Mr. Chairman,
Mr. Goldrick, you've already spoke. I do have 2 other people ahead of you. Mr. Goldrick, and then Mr. Blankley, you're out there. Mr. Goldrick, then Mr. Blankley. I try to always give everybody a shot once.
appreciate it. Well, let me just take us back to reality here. Mr. Simon and Mr. Chadwick talked about volatility and their risk figure. It's irrelevant. It doesn't matter. This is a plain vanilla pension fund with a very long time horizon. What matters is the return, not the volatility of that return, not for this type of portfolio. Mr. Chadwick also mentioned the access that you get through NEPC to corporate managements or the ability to get into these funds. Look at the returns. How's that working for us? It's very poor. Now, they also argued again that the J-curve effect, that eventually, over a period of years, this will all come right. But look at the track record. We have Gilbert Global in here, the one a few years ago, a private investment vehicle. That's been a disaster. And some of these others have done poorly. One other point, Mr. Chadwick said that the fund has been unfairly compared with other firms, that we're valuing these investment vehicles conservatively, and therefore it's being penalized. That's not true. In this comparative data, this is against, it's the Investor Force public database gross, including fees. Now, at my behest, finally, the retirement board voted to get relative valuations net of fees. They haven't done that before. And let me point out, they've had some very high fee investments in here in the past. In the bond side, it's only fairly recently they put in more in the indexed funds. So when you're talking about how these investment vehicles will pan out, these are very highly specialized instruments. They're very specific. This is not, they're not composing a broad portfolio, a diversified portfolio. And I think that this group, Mr. Chairman, doesn't have the expertise to do this. So Mr. Norton was right. It's not just NEPC that's the problem. We have one person on this board with any association with a professional investment management company. The others do not, and it shows up. And we showed how it was reflected in that white paper. So when we talk about an investment plan, consider the past track record. We have to make changes. And I think we have a fiduciary responsibility to start with NEPC. Now, one more thing. When we talk about the union representatives, the representatives of the fiduciaries, you know, they've been sort of going along these years. We've been paying the ARC. But a funny thing happens when a fund seriously underperforms and the ARC keeps going up and you hit bad times. Taxpayers have a way of saying, we're not going to pay that anymore. And the pensions and the pension plans get cut. It is the future beneficiaries who take it on the chin eventually for poor performance. And that is something that we should keep in mind. If we care about their pensions and these people who are working for this town and are about to retire and depend on this, then we make changes to make sure that the reinvestment returns over these years is acceptable and proper. And we haven't done that.
Mr. Blankley, and we'll close with Mr. Finger.
Thank you, Mr. Chairman. Of necessity, this is a return-seeking fund at this point in time. It's not liability matching. And that occurred obviously as a result of what happened in 2008 and 2009. So we've been underwater, and part of it is what happened at that time. Part of it is disappointing investment performance, as pointed out by Mr. Goldrick. But we are where we are now, and from my professional background, the only thing you can possibly do is say, well, where do we go from here? Had I been present at the Investment Advisory Board meeting, and it was a pity I wasn't there, I was unavoidably detained, I would have voted for the continuation of the NEPC contract, especially in light of the fact that we're getting new personnel to oversee. And in the limited time that I've seen him perform in the retirement board, he does give me a great deal of confidence. So going forward, I think that is a good thing. But reverting to the point about return seeking, some of the statistics that were talked about earlier indicated that we are taking on more risk when we go for private equity, inevitably. But we have to do that because we have to improve our returns somehow. And we are moving to do that by moving away from the insurance rules, by instituting an investment plan, by changing the personnel at NEPC and making, I think, as I see it, appropriate investments in private equity. So I say, yes, indeed, we obviously have an oversight responsibility. I don't think we have fiduciary responsibility quite. I think that resides in the retirement board. But I just want to say that from my perspective, it's not as good as it could be, but I think we have put the right elements in place to make things better going forward, and I approve of those changes.
Mr. Finger.
Thanks, Mr. Chairman. I think this has been a healthy discussion, and I personally have found it helpful. Just to go back to some of the comments that have been made, Mr. Goldrick was emphatic in saying that our investments have paled in comparison to similarly sized funds, but yet I'm hearing, and I know for a fact, we had charter limitations and charter restrictions. So unless somebody could tell me that those quote-unquote similarly sized funds were operating under the same restrictions and limitations that we have to operate under pursuant to our charter, I don't think it's a fair comparison. Secondly, I heard both Mr. Goldrick and Mr. Huffman refer to the poor performance of NEPC, Mr. Goldrick specifically to the private investments that have performed poorly. I then switched to Mr. Norton's comments about who has ultimate responsibility for some of those investments, and I agree with him that the recommendations are made, I guess, through the retirement board. They come to the investment advisory committee, which either supports them and sends them forward to the BET. The BET then has a vote. So we do have some responsibility. And as a BET member, oftentimes we do look for the investment advisory committee's recommendations. And I will point out, notwithstanding what Mr. Goldrick said about the poor performance of private investments, he was on the investment advisory committee and he supported every investment that came forward to this body and voted for every one of those along with the majority of this board. Mr. Huffman, talking about performance, every year he's been on this BET, has voted in favor of every recommendation that has come forward to this board. So I don't think it's fair to have these two gentlemen stand up here and have these, we can talk about the investments, but to criticize them for a choice of a firm as a consultant, and the people that are criticizing them are the ones who have also voted for that. So unless we collectively, including Mr. Goldrick and Mr. Huffman, are willing to take some responsibility, it's not a fair conversation. I do also want to ask that, have there been other, Mr. Goldrick commented about a white paper that he and Mr. Huffman prepared. I, for one, have not seen that, so I don't know where it is, but it'd be nice if that was shared with other members of the BET, because oftentimes I'm hearing about different reports that come out of different people on this board, but it's not shared with anybody. I would like to have the benefit of looking at that white paper and probably getting a better understanding. So I would ask, Mr. Chairman, if you have a copy.
I do not.
Mr. Drake, if you have a copy as a chairman, that if you would distribute it. If not, if Mr. Goldrick and Mr. Huffman would be so kind as to maybe send it to Peter Minarski tomorrow so that he could distribute it to the full BET, I would appreciate that for one.
Mr. Chairman, if I may set the record straight, I'd like an opportunity to do that.
I called the last speaker, and I think we've beaten on this for about an hour, and I'm...
Mr. Chairman, I think there were some falsehoods there, and I want to set the record straight.
I think a lot of falsehoods might have been said over the course of the evening because of people's opinion.
Well, let me just,
You
on the
do not
white
have
paper, may I just point out that it was
do not have the
distributed at the
floor.
February meeting.
You do not have the floor, okay? I understand. Let me tell you, let me give a closing comment on this. Tonight was probably the first real conversation we've had about all the issues. And I think going forward, the town really needs to focus on the solution. Maybe it's inflation, maybe it's whatever. I feel the frustration here by the different members. I feel your frustration. But I think as I look back at what we've gone through, some of us together, with the pension obligations and what it's done to the budget and the increase, I think you can see where the frustration comes from. I understand the retirement board. I sometimes compare it to our OPEB performance, much smaller numbers. But I think we need to go with solutions now, not rather I think we've defined the problems. Now we have to work on solutions. And I think that's where, if we can come out of that, I think that's where we come out ahead. So your time is appreciated. Thank you for coming out. Yeah, we appreciate all of your efforts. Okay. Item 3, back to our regular agenda. We still have a lot of things ahead of us, and that's why okay, Mr. Johnson. I'm sorry. I'm sorry, you're right. No, these are our routine applications. I'm sorry. Item number 3, Mr. Drake.
I have 4 routine applications to put before the board this evening. PR 3 from Parks and Recreation, $125,000 release of conditions. PD 13 for the Police Department, $20,800 approval to use tuition payments. PW 5 from the Department of Public Works, $50,000, which is a transfer. And PL 2, which is the Pratt Library, $17,000, which is a transfer.
And I will second this motion.
Okay, routine application has been moved and second. Discussion? All those in favor?
Aye.
Opposed? Abstaining? That item is carried, 12-0-0. My pen just went kapooey on me. Capital carry forward request, I got it. I would like to, we have a fairly lengthy agenda here. We still have some big items. What I would like to do is, on these items, I'll look for to get them before us, a motion to move the items as presented on our agenda, with the point of having a generic committee report on all of the items sort of combined, and then an open discussion where any member can go to any of the items to point out anything that they have a concern with, or a conversation piece. So,
You need a motion, Mr. Chairman. I think that's the prerogative of the chair to.
Well, I'll make a general motion.
okay.
So, Mr. Chairman, I'd like to make a motion that we approve the capital carry forward requests. There's SC 11, PR 4, PR 5, PR 6, PR 8, PR 9, PR 10, PD 12, PW 6, PW 7, PW 8, PW 9, PW 10, 11, 12, 13, 14, 15, ED 7, and ED 7, that we approve those amounts.
Okay. One of the reasons, I thought there was a lot of discussion at the Budget Committee, and I think some of the members weren't there, so I want to have everybody to have a chance to make comments on this. I have my own, but, so, all those in favor of those items being moved as one in that fashion? Do I have any dissension? Okay. So let's go to committee report first.
Mr. Chairman, the Budget Committee met and at fairly good length went through each of these individual items. I will summarize that, yes, there's a lot of, I believe there were about 18 or 19 items a year ago with this whole, with similar meeting in June. I think we had about 2/3 that amount, so it is kind of a lot of it's a housekeeping chore. There were, again, in general, I will talk about a number of these items, for instance, through Public Works, are items that have been designed, perhaps fully designed in many cases, and they're just waiting for Connecticut Department of Transportation approval. A number of the items, especially the number of the larger ticket items, there's $1 million for PD 9, $2.45 million for PD 10, PD 12 is 2.6. In many cases, these are either 80% or 100% reimbursable by the state. So basically, we're waiting for the state to give us approval and acknowledgement to go ahead with the plan. So a lot of them are fairly routine. There are a number of items, I believe about 5 of them, that are from 2014. They were carried over last year, and the request has been made to carry forward this year. I will comment on SC 11. The largest item is $11.9 million I believe that's kind of in two separate areas, 2.5 million and 9.4 million. This is the 800 megahertz system that's been discussed a lot for the last couple of years. It is a long, involved process, primarily headed up by the police department, Captain Cordick. Again, this is a system that's used by the police, fire, GEMS, DPW, Board of Ed, pretty much every department in town, so it's a very involved process. Captain Cordick had described making progress. The first thing they have to address are the infrastructure needs before they actually go buy the handheld units and distribute them among the town. So the Budget Committee on pretty much all these items, all these items voted 4-0 to approve their funding and forward it to the full BET.
Thank you. No other committees, right? No other committee. Okay, I'll call it, as I said, an open discussion. If any member, Ms. Tarkington, Mr. Raymer, I'm just going to keep the initials going here.
As a member of the Budget Committee, quite frankly, I was very concerned that this, as I am during the budget season, that we begin so many projects or appropriate money for so many projects, and that those projects haven't started. And that's what this list of projects is all about. The projects that concerned me the most of this list, of approximately $25 million, were really the projects that are in the sewer maintenance fund. And because on those projects, we've already taxed the taxpayers. Those are our traditional pay-as-you-go. And on one of these projects, July 1st, we'll be taxing for the third year, approximately 60%, but haven't started the project. And then the other project will tax 40%. So that our process, our department heads are coming in, asking for a lot of projects. There's a lot of pressures on them too. But I think that this is not realistically showing how we can manage our projects. And I think, as we've talked before, there may be some other issues that relate to the charter because of multiple years of not beginning a project. But I think the scope and size of this, and also in particularly those projects that are on traditional pay-as-you-go, concern me that we've sort of too much pressure to proceed with a lot of projects that we can't follow and complete in a timely manner.
Mr. Raymer?
Yeah, well, I had a conversation with our chair shortly before this meeting convened, and the chair brought to my attention Section 31 of the Charter, which I had not focused on previously. And I would have to say, I'm going to read it in just a second, read it aloud in just a second. But it gives me pause that I believe under the Charter we do not have the prerogative to continue appropriations from 2014, fiscal year ending 2014 and fiscal year ending 2013. Mr. Johnson said he had counted 5. I only am counting 4, so there's one that I may be missing. But let me just read Section 31 aloud for those of you who don't have access to it on your iPads. It says that all uncommitted appropriations shall be covered back into the town treasury, except that uncommitted appropriations for capital improvements may, at the end of any fiscal year, and with the approval of the board, meaning us, be continued and set up as a reserve for the same purpose and may be committed against for one fiscal year after the expiration of the fiscal year for which the appropriation was originally made. I don't see two ways to read Section 31. Section 31 allows us to take a capital item, which was an appropriation for fiscal year 14-15, and to continue it for fiscal year 15-16. But under the Charter, we do not have the prerogative to continue an appropriation that was appropriated in calendar year 13-14 or earlier. And I don't see two ways about it. I realize that it's very unpleasant, it's very inconvenient. I realize that the reason that most of these weren't expended over the past year were for very sound reasons, such as waiting for permits or the like, or consents from the state. But there's no latitude under Section 31, and I think we should be carving out those items that are not from fiscal year 15 and not continuing those, because to do otherwise is in violation of Section 31 of the Charter.
So,
Mr. Chairman?
go ahead.
Yep. I wondered if Mr. Minarski could help me with, in particular, SE 11 and understanding past practice. SE 11 had appropriations in 3 different years, not entirely unusual for a number of our large capital appropriations. And Pete, if you could just review how the BET has handled this in the past, and then in particular, what's going on with respect to SE 11, both on a cash basis, what they're going to need in the short term, as well as what they need to move forward to sign a contract.
There's 2 questions there. I would defer to Roland about past practice, because I'm not familiar with the past practice of multiple years in arrears, unless you can comment, Roland. And I'll answer SE 11 specifically. Is there an established past practice in handling that?
I guess the one area that's maybe not as firm as like it to is what constitutes starting a project. And the example that we use is you have a building, you have a demolition, you knock it down and you dig the hole. And then a year later, you have the construction money. Did you start that project at that point, even if you didn't spend the construction money or not? And that's kind of the one area that I think is.
But does that apply in the instances we're talking about here? I mean, I'm looking at $200,000 for the old Greenwich Civic Center heating system. I understand that we were holding that in reserve against the day that the thing failed. But frankly, we have not spent $1 of that $200,000 because, by the grace of God, the goddamn thing has not failed. With the E1 grinder pump panels, $300,000, I don't know the answer to that. Maybe a case could be made that in some sense we've started the work or committed something, some straw. I mean, I'll accept very little. But to my mind, I mean, Steve Walco taught me the lesson of the importance of process. I think it was one of the finest chairs I've ever seen work aboard. The man was a believer in process, and he never flinched from it. And I think we shouldn't do so either.
I agree with you.
If we can't make a case that
I agree.
We've done a little something to commit on something, then I think it just plain violates Section 31, and we mustn't do it.
I agree with you on the other 4 or 5. I'm going to talk to SE 11.
Okay.
SE 11 has 3 appropriations. It's got $155,000 for 2013. It's got the 2.5 for 14 and the 9.4 for 15. That project was started and money was spent, and there was an RFP, and we hired Trout Communications. So the project for 13 was started. The 14, it's my understanding, there's going to be a contract signed before this fiscal year is over. So in the case of SE 11, which differentiates from the other ones you just referred to on page 2, I say it's different. Okay. Another option, if you disagree, you could elapse the middle appropriation, and you've got the current year appropriation of 9.4, you've got more than enough money, and then you can either reappropriate it tonight, July, send it to the RTM.
You don't even
or,
need to, you convinced me on SC 11.
That's the only one I was going
to. My focus is on the others. Maybe there's a case to be made on some of the others that we've done something, spent a couple of dollars, or somehow committed, or whatever.
No, I agree with you.
But after that,
On the others, I totally agree with you, but I thought the question was SC 11 that I was answering.
Roland, is PR4, they considered a 2014 or 15?
It is. It's a 13.
And didn't they already build the fencing? I think they explained to us in our budget committee that they built the fencing, but not the retaining wall part of it. That's why that was.
Nothing was spent on this appropriation.
Okay.
So I think Ms. Kiernan has the right question. So let's talk about what are the exceptions. Anything we appropriate as a board for a state road or bridge, state law where there's any reimbursement requires us to keep that appropriation open until their final inspection and closeout. Anything we appropriate for a school building project where there's state reimbursement, which should be by state law out of the capital and recurring fund, that appropriation stays in effect until the final State Board of Education inspection and closeout. An example of that is we have $2,300 still in Hamilton Avenue School because we haven't finished that. The only other exception, there might be some new stuff coming out with Homeland Security, but this is a process that I think in the charter calls for us to be able to say, what's wrong? Why are we not getting things done? When you talk about $25 million in front of us, that's number one. Number two, I think if it goes back to the RTM, it goes back with a very simple explanation. It wasn't done. Why wasn't it done? And we want to appropriate it for another year. But this is so we don't get it. Now, in SE 11, you notice there's one account number there. This is, lately, we've had a little discussion on bundling of projects. This is where it gets a little bit tricky when we add money to it. But each year, there's still a particular appropriation. I think you clearly decided that. As I've said, this had come up. We had some other issues going on this month, and I think Roland and I have this conversation every year. We try to give the department heads. All these applications came in very, very late, right before the call was being built, and we held it till Friday. Am I right, Roland? Yes. Because the departments aren't even aware, and that's why I always say, if the budget committee, if we're going to focus on anything, it's our burn rate and our capital appropriation statement, because that tells us where we're going to go. How much money are we lapsing this year in prior capital projects that are done and being closed out?
I'm not sure what that number is at this point.
We don't know yet. But now, by the way, if we do make any modifications to these, the modification they can still go to July 1. Just so you know, they still have the rest of this month if something was to commit. So if we do make a modification to pull these, we pull them as of July 1, because the fiscal year is not over. So in the instance of SE 11, my recommendation would be just to change that capital carry forward from 11.9 to 9.4, would be just to modify the number.
And the logic of that, Mr. Chairman, is?
Because the $2.5 million appropriation was from the prior to 14, and it lapsed. So that would be just, right, and they don't have a contract as of yet. Just so you know, before I brought this to Mr. Raymer, who I really appreciate his help, I did go to Captain Cordick and say, what do we anticipate the needs for? And he goes, we're running late, and he explained the details. And one project in the radio system leads into another. The first project is just for the microwave system that does all of the relaying of the calls. That has to be decided, picked on, long before the RFP can even be started to draft for the major part of it, and that's looking in the September range. So we'll either be able to do an interim or be able to roll it into the budget, whatever we see fit at that time. And he promised to have communication. His anticipated expenditures for the next 12 months were, the number he gave me were $700,000 or $800,000, so they'll have $9.4 million to do that. So just, I would never do that to a department head without trying to say, hey, what's the real numbers here, so we're covered.
But I must add here that when we approved SE 11 in the Budget Committee, and then the full BET, we really made it very clear that this should be and managed within the Selectman's office, First Selectman's office. So, while we're talking with the department head here, we really need to focus it back to the way we approved that. But I would, while Mr. Minarski was standing up there, I'd like to ask one more question of him through you. How does he propose that we handle something like a PW 13, which is in the sewer maintenance fund, and where we've already taxed the taxpayers within the fund for 40% of that already? How do we let that lapse?
We're not.
And yet not.
Because what'll happen is, my intent would be, I would entertain a motion that PW 13, PW 6, PR 4 and 5 come back to us if they're not committed at our July meeting for reappropriation. And I don't even think we need the department head. Well, we can have them if we so choose, but I would just have them come back as an interim appropriation, get them approved by us. They can go on the RTM call as they see fit. With SE 11, I would vote to continue that in force at a modified number of 9.4 rather than the 11.9. That's how I would see it being handled. It's awful quiet. That sounds like logical.
Mr. Benarski, have you seen such a procedure in the past, or we've never had the volume of carry forwards in the past for over a several-year period?
I went back about 5 years, and the high point was 14. I think last year was 14.
Yeah, we had a fair
Before it was
amount.
We had a fair amount last
Low
year.
point was about 5. But this is the first time I'm experiencing this, where actually the BET is enforcing Section 31 of the charter. And I agree. I agree that the charter says that you got to lapse them. It's just, I think SE 11 is not the same as the other 4 or 5.
Because
Because the
it's
original,
bundled.
the project started.
Right, it's bundled. You got three
No
different.
question, it's very, very slow. And then, just like you allowed Tom Greco to pull one last week, because it's, all of a sudden he said there's activity there, I think what I heard from you a couple hours ago was there is activity, and there is a contract that they're going to.
Correct. And,
SC 11?
yeah,
Yes.
Okay,
but nothing near the millions of
But the
dollars.
9.4 is more than enough
Yeah,
to
it's more
cover
than
for the
enough.
next 12. And you've got options here, is either appropriate it July.
Yep.
Or next spring, and then tack the 2.5, or whatever the number is. It might be lower after the bids come in. Through the budget process, so their money's available 12 months from now, 12 and a half months.
I think the best thing to do would be just to, there's only two departments there, police, right, or the police, DPW in part, and just say, we plan on reappropriating those, and, because you've already had the conversation with them. So we already know the status, because they've already met with us this month asking to continue them in force. So let's try a motion.
So, yeah, if I were to make a motion on this, it sounds like we want to do it around the 9.4 million.
Correct. Reduce that one to 9.4.
So I'll make a motion that we approve SE 11 for $9.4 million, assuming that no other contracts are signed between now and June 30th or 31st.
Yeah,
whatever it is,
and strictly
as of-
speaking,
Excuse me, as
it's-
of July 1st.
Is it approval, or is it carrying forward?
Right, we're approving the-
Approving the carry forward.
Approving the carry forward.
Approving the carry forward.
Okay.
Thank you.
We're approving the carry forward effective July 1st.
At a reduced fee.
No, up until July 1st, it's where it is. July 1st, it's 9.4. Okay, so we have that motion. Are all set on that?
Yeah.
Do I have a second?
I'll second.
Leslie
Leslie
second.
already
Okay,
did, yeah.
all those in favor?
Aye.
Opposed? Abstaining? That motion is carried. The next one can be one motion for 4 items, I think.
So I would move that we delete from this list. By the way, if I may, because I can't see it from the digits on the page, Roland, are you able to confirm for me that in fact PR4 is from fiscal
Yeah.
year 13,
The
14?
project number is 14185.
Thank you. Then I will move, if I may, that we delete from the list of the carryovers PR4, PR5, PW6, and PW13.
Seconded by Ms. Tarkington. Discussion? All those in favor?
Aye.
Opposed? Abstaining? That motion is carried. So that would bring us back to a motion for the capital carry forward request to be approved as amended.
So I will make that a motion that we approve the capital carried forward requests. And should I read them specifically, or just the remainder of those items?
He's got to get out of reading the whole list.
Yeah, that's just too much work.
I already did initially, but that was for a
I
different
believe his
motion, I
interest is
believe.
waning.
Okay, so we have a motion to carry the capital request forward as amended. Seconded by Mr. Norton. Discussion? All those in favor? Opposed? Abstaining?
Mr. Chairman?
Mr. Raymer?
That's what I can understand. So then, may I expect then that with the prompting from Mr. Menarski, PR4, PR5, PW6, and PW13, or equivalents thereof, will be put onto our agenda as interim appropriations in the July meeting?
We can do that.
Depending on,
They may pull them. That's the intent, but they may.
I don't think they're going to pull any.
I don't think they're,
We'll see.
we'll check in with them.
and we will determine that and put it on the agenda for July if we,
And the same thing, if Mark wants to reappropriate the 2.5,
I
that's
didn't
fine
mean to
too.
imply they're going to pull all of them, but just using the boat as an example.
Yeah.
They might back off of it.
It's a slow boat. Okay, moving on, item number 5. Controllers Report. Hi, Peter, good to see you tonight. How's
Good
everything
evening.
going? Where you been all night?
Mr. Chairman. I was actually very sad to hear about Mr. Skidmore. I got to know him working, he was one of the 3 OPEB members. And I actually had a note to remind the BET, Mr. Skidmore actually moved out of town about 6 months ago, and we were scheduled to replace him anyway, and it's unfortunate. But the next OPEB meeting is July 10th, and we can proceed with 2 members, but we still tasked with finding a third OPEB, and we were before his untimely passing.
Just a small point. Isn't the process, shouldn't we alert the Selectmen's Advisory Committee on Nominations that we have the vacancy?
Do they have that committee?
I don't recall, maybe Art can help, how we found Mr. Ferdinand and Mr. Stricker.
When I was chair of that
Sorry.
committee, we tried and got no response out of, well, we did get one response, and we decided not to pass on that nomination. We were much more successful, but the current members of the committee, the Investment Advisory Committee, making recommendations.
I'm sure that's fine. We'll work on it. I just didn't want to ignore the
I've heard
Selectmen's
some names
Committee.
floating around, but
And-
Mr.
Yeah,
Finger?
we won't.
And
we'll
then
try-
the Investment Advisory Committee interviews qualified residents for the OPEB trust agreement.
Yes, thank you, that's great.
Again, you could probably proceed through they meet quarterly. So you could, for the July 10th, if you don't have somebody in place, you could have a meeting with 2 members. And I use the word members. It's not everyone knows that the actual trustee of the OPEB board is Kathleen Murphy, is the treasurer. The other ones are actually members, not trustees.
You also have to vote on a chair.
Yes, we do, but that, it would either Mr. Ferdinand or Mr. Chadwick.
Stricker.
I'm sorry. That was my next, I was going to make a statement about Mr. Chadwick. Apologize. Actually, it's not in the OPEB report, but Mr. Chadwick's term is up June 30th. He just finished a 4-year term from July 1st, 11th through the 15th. And for the members that don't know, the process is that the chairman of the BET, Mr. Byrne from the RTM, the moderator, and Mr. Tessie, the first selectman, collectively get 1 vote each. And I don't know how that process works as far as finding someone other than somebody throwing their hat in the ring, but the 3 of you are tasked with either re-upping Mr. Chadwick or replacing him with someone
Mr. Byrne and I have reminded Mr. Tessie we need to get a get-together.
Getting back to the controller's report, on page 7, the good news, I sent the email out. We finally got the historic tax credits, and you can see the breakdown. We need the numbers for the 2 fiscal years, the current year and next year. Their revenue sources, their financing sources to balance the budget. And then there's the piece, the $950 that has to be returned to the capital non-recurring that was appropriated 2 springs ago to pay for capital projects at Nathaniel and Witherall. And one more item before I get to an ADP update. Attached to the controller's report, I'd like to personally thank Roland Geiger, Mary Wolzakowski, the chief accountant. We get this award we get every year for excellence in financial reporting for the CAFR. It's put out by the GFOA, which is North America and Canada. So I thank them too. They're more than anybody responsible for us getting that report.
I had Mr. Drake scheduled to read that letter to the board, and because I didn't know if I gotten it to Elaine in time, but congratulations, that is a great accomplishment, and I can say we're proud of it.
What I'd like to do is combine the next piece of the controller's report, and then I'll open up questions, with an item that's later on, the human resources capital management in the backs.
Right.
At this point.
I think our 2 members on that might want to report
Yeah,
now with
I'll
you.
start, and I think Ms. Kieran and Ms. Weisler, they put in a lot of time on this. Currently, the general ledger is posted. It's posted currently through June. We're still doing the manual updates, not manual updates, the manual, actually, it is an update to the ADP import in the general ledger piece. We have, we had Barry Don on board for the last year and a half, 2 years, helping us through this process, and we went out and hired Geneva consultant firm, the firm Geneva Consultant, and there was an expert, a young lady in there with ADP experience who's been invaluable, and she's tasked with coming up with a payroll assessment. It's a draft report. It's got a variety of recommendations, but the one I'll sticking to the controller's report is the general ledger update is the most important piece in there. Where we are now is, again, Roland Geiger and Anthony Giovanone at the Board of Ed have been spending a lot of time working with the consultant. And there's a couple of areas that have to be addressed currently in the summer to get the GL import up and running smoothly so it's a seamless import. One is the certified staff used to have its own earnings code. When the ADP was configured last year prior to the October 1st payroll, it disappeared. They were rolled into one earnings code. It created problems with the general ledger interface. That earnings code for certified staff, including the GOSA members and the cabinet, has to be reestablished. So that's one key piece. There's a second area. We need another 8 or 9 earnings codes that have to be created so that certain charges can go to applicable object codes. And then there's a third piece that has to be done is the chart of accounts for the grants, which was presenting a problem. We've determined we no longer need it, and we're going to use the current chart of accounts that's in the general fund. So once we get these 3 areas addressed, corrected, and moved on, we should have a seamless import from ADP to the general ledger, and then to use the term manipulate no longer is done in the report as far as changing the data so that it gets to the proper general ledger code. Payroll is going to do the reconfigurations or the changing of the earning codes. What's key here is going back to Geneva Consultant. We're going to lose this very valuable consultant. She's only working through the end of June, and we have to replace her because Geneva is going to be instrumental in making sure that the Board of Education people are properly trained and they properly use the system. And this is a more encompassing assessment, payroll assessment, beside the general ledger. And this report, which addresses a number of issues, is being put together to be sent to a steering committee for implementation. The steering committee, which was recently created, is led by the first selectman and the superintendent of schools, so that we have the clout to get the people, whether it's Board of Ed side or the town side, to adhere to the report and make sure that these earning codes are being properly administrated. That is my variation of the Human Resources Capital Management Report, and I think the intent of the item was to just simply address the issues with the general ledger, correct? Or did you want to get into anything else?
Pete, do you want to talk about the cash reconciliation? Because I think that's been something you've discussed in the past.
The cash reconciliation between the treasurer and the budget director, the treasurer's cash and the general ledger is rolling is cash, is basically they're reconciled to a very small number. Now Kathleen can turn her attention to the payroll reconciliation as far as the bank statements. And I didn't want to get too technical, but if you look at the controller's report, there's the issues that address the bank reconciliation are the common ones before you had ADP. It's the manual checks, the off-cycle checks. You have to void a check. It doesn't get corrected till the next payroll cycle. So she's going to turn her attention to the bank statements. And the goal here is to have a reconciled June 30th bank statement so that when the McGladrey, the auditors come in, we won't, the management letter will not have us out of balance with a bank statement for June 30th. So
we're not reconciled for two reasons. Number one, we haven't reached June 30th, and number two, she's just recently turned her attention to the small items that reconcile the bank statement.
Could I just comment on the sort of non-GL, non-finance department topics? Would that be right, Mr.
Please.
Chairman? Yeah. So there is this large draft report that Geneva Consulting produced. I believe it's still being reviewed with some department heads. Is that correct? And still in draft form?
Yes.
But through all the meetings that Ms. Weisler and I have attended, we do know that part of the issue, or part of some of the issues going forward, is that all departments are not fully utilizing this system. There are some, in fact, who are keeping dual systems, and one paper and one through ADP, which they're being counseled and supported to learn to use fully the ADP system, and we will get there. But an important aspect of all of this is training. We have to continue to train department heads and train employees on how to use the system. It's a robust system. We want to use as much of it as we can, and we need to keep this training up going forward. There is also a very robust reporting functionality in this system that departments can use for regulatory reporting. For example, Nathaniel Witherell has very specialized reports they need to get out for their purposes. And that also is an area where we need continued support and training, and we have to have the system sustainable going forward. So Mr. Minarski has made a very good observation during these meetings, which is we need to have something like a user group or a continuation in some form of the steering committee going forward so that we make sure the system is successful going forward, is used in a very complete way, and that we can blue sky or scout out any issues that may come up, as well as when we move to a newer version of the system, which will happen at some point in time.
Just one other final comment. Mr. Minarski mentioned that we have had the services of an outstanding consultant from Geneva Consulting. That person is leaving the town at the end of this month to assume a full-time position. However, the town is looking to replace that consultant, realizing, as Ms. Cannon pointed out, there's still a number of issues to be able to fully utilize the system that we need to resolve. So we are looking to replace that person. And then just to give you a sense, over the 9 months, I guess, or 8 months since the system was implemented, there were sort of 200 items that were problems or issues. Those have been resolved. There's still a list of about 30 issues. There are some more challenges ahead, but if you look at where we've come in terms of getting the payroll working, getting the vendor payment files to work in now, we finally have a solution for the general ledger. I think that really reflects the hard work that many, many departments have done, including certainly our finance department.
Thank you.
I think some credit goes to Mary Lee and Nancy.
Well, just a little bit. A lot of work by those two on this. Thank you very much. Motion to accept the controller's report?
So moved.
Second? Mr. Raymer, seconded. All those in favor?
Aye.
Opposed? Abstaining? That is carried 12-0-0. Item number 6. I have a motion by Mr. Norton to move the treasurer's report.
Second.
Seconded by Mr. Johnson. Discussion? All those in favor?
Aye.
Opposed? Abstaining? BET Standing Committee reports. Can't think of anything there. Number 8, liaison reports.
Mr. Chairman, could I go back on the 2 items in the audit committee I just want to bring to everybody's attention. One of the responsibilities of the audit committee is to accept any charge-offs on town funds by the various departments. We normally do it in April, but I was approached by the Witherell board to do it this month, and at the June meeting last week, or week before last, I guess it was, we approved $103,238 for them to charge off. It basically came from a list of accounts and one which there was an attorney pursuit, and $56,954 balance from that we charged off, which is included in the $103,238, which the audit committee accepted the charge off from Nathaniel Witherell.
Okay.
And the second item, I just want to remind everybody that on June 23rd, the audit committee in this room will conduct a lessons learned meeting, which will be for the rehabilitation and rebuilding of Hamilton Ave School.
Got it. Okay, item 8, what do we have? Item 9, we have the MESA Building Committee report and a soil report in your package, I believe. And under labor contracts, Ms. Kieran and I are starting the contract with the Board of Ed for GOSA. Interesting. We've already running into, I'll give the report if we want. We're already asking for the, all the contract numbers and total cost of contract and all the information. And, there's been some change at the Board of Ed with retirees and people moving, and I think we're going to see Roland Geiger one day and having a conversation, see if we can dig up some of the numbers, because I think we're going to have to get them ourselves. Ms. Kieran is smiling over there, but I said it as nicely as I could.
Very nice.
Moving on, under item number 10, we have one item left. Mr. Norton?
Yes, at the June audit committee meeting, the audit committee made a recommendation to the full board. Our vote was 4-0 to recommend McGladrey and Company to be the external auditor of the fiscal year ending June 30th, 2015. That was simply an oversight. We normally do it in March. We've already engaged them, but nevertheless, this board has to approve the renewal of that contract or the performance of that contract.
So that's on behalf of the audit committee. Discussion? All those in favor?
Aye.
Opposed? Abstaining? That is carried 12-0-0. Under old business, we did human resources, so fund balance and debt policy review, first read. Mr. Drake.
Thank you, Mr. Chairman. Everyone has in their package a short report from our 4-person working group for the debt and fund balance policy. The members were Mr. Finger, Ms. Kiernan, Ms. Weisler, and me. We met 6 times. We agreed on a fund balance policy recommendation that we voted 4-0 in favor of, which is in your package. And the primary change was to eliminate, we had a budgeted calculation as well as an actual calculation in there, and we basically eliminated the budgeted one because it led to confusion, and we should base ourselves on actuals. And so while the budgeted aspect had a purpose years ago, that purpose is past. And so that was a simplification, but you see the fund balance policy in your package. We provided 2 alternative debt policies to the full board. You'll see them in your package. And rather than have a full discussion of this topic tonight, this is a first read, so any longer discussion we'd have today would just be repeated when we fully examine these matters on July 20th. So the intention is to provide these policies for your review, everyone's review. And we'd propose, please communicate any comments, suggestions, and reactions and modifications to the 4 people in the working group. And if you do that by July 6th, which is 3 weeks from today, Monday, 3 weeks from today, that'll give us time as a group to review them, think them over, and add what we can, or help out the board to move to a conclusion by our July 20th meeting, which is 2 weeks after those 3 weeks. So we'd invite your comments.
Mr. Finger.
Yeah, I just want to, for the sake of clarification, the summary that accompanied the various drafts of the debt policy and the fund balance, the first 3 paragraphs, I would say, Bill, correct me if you disagree, reflect accurately what the 4 of us did and talked about. But from the 4th paragraph down to the end of the little chart is really product of Bill Drake and Nancy Weisler. Mary Lee and I were not, we did not contribute to that Excel model, we don't necessarily concur, but we asked Bill if he could put in words some of the assumptions that he and Nancy were making in their model. And this is, Bill, correct me again if I'm wrong, this is a reflection of you doing what we had asked you for a purpose of clarification of your model, which follows the draft summary. Again, the Excel spreadsheet is a Nancy Weissler, Bill Drake Excel spreadsheet.
Yeah, thanks for the rendering it more precise. I agree completely with what Mr. Finger said. That whole part that he's identified is all commentary on the model, and we worked on the model, so I agree completely. Thank you.
Could I, Mr. Chairman, ask for a favor of Mr. Drake, perhaps going forward, or if this is put in a packet or reproduced again, the model itself, if that could also be marked as the product of yours and Ms. Weissler's efforts. It is, a blinding amount of numbers that looks very much like the capital model that Roland produces and is in the budget book every year. Even some folks attending our meetings were confusing them. And I think the more we can mark this as something different from what is in the public domain already as part of the capital appropriations book, we should do so. It is extremely different. There are a number of different assumptions that have been made and changes made, but it does, for those who do not live and breathe it the way we do it, it does look very similar. So I'd be grateful for a little more labeling on that.
So we need a little help, because obviously there's several things I need to bring up on the fund and debt policy. Obviously, I did make one committee meeting because a question had come up from one of our members about, when we get reimbursement, and I never thought about that, so I went to that meeting to hear that. But with that said, let's use that July date, because if we get enough material submitted, and believe me, what we don't want to be trying to do is drafting on the fly when we get to our July meeting. I went to great lengths to make sure, as the package went out, the challenge I had when building up the budget packages is we got it the day the packages went out. No fault to the committee, they were very busy, but I didn't want it to be looked at as this is the one party draft, this is another party draft on either debt or fund balance. I wanted it to sort of, be clear. So I had that challenge, and I was wrestling with the fact that if I didn't send it to our full distribution list, I would attach it to the minutes, so it would be public sometime tomorrow. But in the end, Mr. Finger, thank you for your help. We cleared up some language and we got them out to the full distribution. And I think this is a chance for the RTM district leaders and committee chairs and whoever else we send this to opine on it. But I would really encourage, and I'm not against having a work session, which is a public meeting, for us to, especially if there's suggested draft language changes. They are two separate policies, and when we get to them, we'll address them separately. But a lot of work has gone into that. I know you had several meetings. They were all posted, everything FOI, so we're okay there. So again, I encourage everybody's participation in this. And, as we approach the 10 o'clock hour, and I'll thank Mr. Goldrick for this, one of the things that I was wrestling with when we had the retirement board tonight versus the carryovers, I'm trying to balance to where we don't have, I'm trying to keep July's agenda as light as possible, and this being our item. So it doesn't always work that way, but that was just sort of the background on my side.
Yeah, just a slight precision. When you look at that little memo we wrote to everyone, that fourth paragraph says the group reviewed the familiar model, which is in the budget schedules. There are 4 bullet points there. What we're explaining there is the model that's in your budget book. So that first little chapter in the middle of the report is just describing the model you have that Ms. Kiernan is referring to. It's the part after that starts with Ms. Drake and Ms. Weissler prepared changes that we made changes. So just hope that's a helpful explanation.
Okay, item 12, approval of BET meeting minutes for May 18th. Moved and seconded, discussion, all those in favor? Aye. Opposed, abstaining? Mr. Drake, do you have anything?
Nothing at this time.
Mr. Norton?
No, sir.
I have a few things tonight. I'd like to thank all the members who attended the meetings, the first selectman called with the fire department personnel. Thank you for attending. I really haven't had a chance to talk to too many of you what happened in various meetings. Mr. Finger went with me, so he grabbed me by the collar and kept me in line, but I appreciate that. But no, I think those were positive meetings, and we're having those conversations. For those of you who went to the PTA Council dinner, this is the first time this year that I had to speak in front of the PTA Council, and I remember seeing some of you there, but I saw Mr. Finger there, I saw Ms. Tarking, I can't remember who was there. After the Budget Committee this month, I've come to the learning process. I always try to continue to learn at this. We need to change the BET schedule for June. This, for some reason, and I'll make the footnote that.
June?
No, for June. We meet in June after the RTM. And especially when you have June being the month for transfers and continued in force and possible interim appropriations to square up budgets, we should meet before the RTM in June. Even if it's a special meeting, but we should do that because that led us into some items this month where the conversation didn't go so well. CDBG is coming to an end for our members that are involved in that. They have some big items on there. I received an email from Alma. They're coming to the close on that for that. And if anybody wants to volunteer and work the high school graduation party from 10 p.m. till 2 a.m. with me this Thursday. No volunteers?
No, thank you.
No volunteers?
It's your first time, you can enjoy it.
It's my second. I have to do it.
Good chaperone.
So I will be doing that this month, so that's fine. So other than that, Mr. Blankley?
Second.
All those in favor? Opposed? We are done.